Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS TaxFitness podcast. Today I'm joined by Darren Gleeson, the founder and Managing Director of TaxFitness. How are you, Darren?
Hello, Peter. Hello, viewers. Good to catch up.
So it's great to have you with us today. A bit of background to why we're presenting this podcast today. There are significant problems for SMEs in the community at present. I think every accountant knows that. And we're of the belief that accountants need to be supplying a broader range of services than the taxation return. As important as the annual set of accounts and taxation returns are, it's the management of the business that's very important. According to the Intuit QuickBooks SMB survey report they produced in September 2025, only 15% of 500 small businesses that they interviewed recognise that their accountant is providing a key strategic partner service. Only 15%, 75 out of 500. And the definition that Intuit used as what a key strategic partner was: our accountant is a key partner in our business and our go-to professional for advice. They are extremely valuable to our business growth and success. I truly believe that every accounting firm in Australia should be aiming for that recognition from your clients, not just 15% of them. ESS BIZTOOLS is committed to providing our members with the resources to implement services that will be recognised by your clients as being the services that were justified to be called the key strategic partner service. We have launched a Change to What You Want to See program for the period now through to the 30th of June. And part of that is a relationship with our affiliates, TaxFitness, and with the Boss Factor Library. Today we're going to be concentrating on TaxFitness, and Darren's here to share a fantastic product that he's developed, benchmarking of the top 20% of a business category. Darren, welcome, and I'd like you to give us an introduction of benchmarking against the top 20%.
Okay, thanks, Peter. Thanks for the opportunity. That numbers you talked about, 15% of business clients, look at their accountant as their trusted advisor. I'm dismayed with that, but I even think it's probably an exaggeration. I think the number could actually, my experience, it could be 5 or 10%. One of the things that drives me nuts with accountants is about 35,000 accounting firms in Australia or so. You go to every one of their website, they're a business advisor. And we've had this conversation before. They've got all these business advisory services. You were telling me the story. You've rang up a couple of them and they said they do R&D or they do such and such. They don't really. We've just got it on our website and we talk about it. I think the thing about business advisory is, and you talked about the economic environment, as we said before, the latest stuff shows that I think 43% of small businesses are losing money. Another 20% are not even making the average wage. Okay, so there's a big problem with Australia's small business profitability and also productivity, which is all tied into it. We've created a benchmarking system through TaxFitness called the top 20%. Okay, so the whole thing about that is we want to benchmark against the top 20% in each industry. If you're a sports lover, rugby, football, whatever, your team's on the ladder, if you want to improve, you don't benchmark and follow the team that's coming last, or you don't even benchmark the team that's coming 50%. You either look at last year's premiers or you look at the top 40%. And that's the basis of what the top 20% benchmarking is on. When I talk to a lot of accountants, and I probably talk to 5 or 6 different accounting practices a day at the moment, they all talk about, yeah, we do advisory, but they do it ad hoc generally. There might be 5% that have got a system and a process, and they talk about doing it ad hoc. And then I ask them, the second question is, what tools you got? And they often say there might be the odd software program or product, But often they say nothing, Excel, a bit of a thing. And as we know, if you do anything ad hoc, you can't do it efficiently. Okay, one-off jobs is customized, takes a lot of time, a lot of man hours, and it doesn't get that that efficiency and effectiveness that having a process and a system. When we talk about business performance, I think the number one thing to bear in mind, if we want to talk about improving business performance, we've got to take a leaf out of the great W. Edwards Deming, who said that you can't improve what you don't benchmark.
Yeah.
You know, like, otherwise the client comes in and, you know, last year's profit is, you know, 100 grand, this year it's 150. Is that good or is it bad? Is that, you know, how do we compare that? Like, do we compare it to my mate? He's making 300 grand a year on a different business. Or, you know, my cousin, you know, so we got nothing to compare against. But what we can do, and what is easy to do, is we compare it to the top 20%. So say, for example, I'm an electrician. I might be making my 150, 200 grand profit. Let's compare that to an objective benchmark, the top 20%. And then for my level of turnover, we can see how I actually compare and how my wages and all expenses come through. What do you think, Peter?
Yes, I think that's very important. In fact, you and I both attended a very interesting webinar yesterday, didn't we?
Definitely.
Where the analysis was on accounting firms. And I found that very interesting. It was a long time since I'd seen Andrew in operation, Andrew Robertson. But he had an interesting approach and was really alerting accountants to the benefit that benchmarking can present back to your own practices, as well as obviously the same approach that Andrew was talking about should be one of the starting points.
It's got to be the starting point. Yeah, you know, it's like the personal trainer. If I'm overweight and don't exercise, how am I going to pick up you as a client? You know, I say to you, Peter, you run 10 kilometres, but I'm just sitting there smoking and, you know, eating McDonald's. You got to live it, don't you? So if we want to be
I wish I could run 10 kilometres these days,
well,
but
whatever.
I do a few, but not running.
You know
now.
what I mean? You know, there's no point just talking about it. We've got to live it ourselves.
Yeah. And it's when you look at exercise, and I'm getting on a bit, it's getting into a routine. And I think the delivery of services that really help your SMEs is a routine, because what at ESS BIZTOOLS we're trying to encourage accountants to think about is that you are the virtual accountant in your client's firm. And if you go and talk to any of your colleagues in the profession who work for a corporation, they don't sit there and do tax returns all day. They might do one or two tax returns, but the main work they're working on is business analysis, what-if type questions that we were discussing before we started are very important, because owners are asking questions. Who does the average SME ask a what-if question? Could we do it this way? Could we do it this other way?
Yeah, no, it's a good question. And the thing is, if accountants don't step up, I know, you know, 5 or 10% of practices, they've lifted the game. They're doing some amazing people, practices doing amazing work with business clients. But what I'm saying is the 90% have got a long way to go. It's like, I can't remember who it was. One of my mentors, he said, we were talking about LinkedIn, and he said, you know, some of the stuff up there is actually true, you know. Everybody, you know, puts up amazing stuff on, you know, the world's greatest accountant and all this. This is all fine, but we actually need to not just put it up there and talk about it. You need to actually do it.
Implement it.
Implement it. You know, like I talked about the accountants' websites. No point saying I do all these business advisory stuff if I don't actually do it. And I don't actually talk and communicate and offer it to the clients.
And one of the frustrations I've got, and we're slightly going off, we'll come back on the benchmarking in a moment, but it is benchmarking, is that 43 years ago, the Institute of Chartered Accountants and the Australian Society of Accountants, which later become the CPAs, resolved to enter into an agreement with the University of New England that they would create a specialist group that was to operate virtually as a free enterprise business, to communicate with the accounting profession on developing commercial services to assist SMEs to survive and ultimately thrive in their businesses. That was 43 years ago. I was one of the, in 1982, I went to the first time, and that organisation became known as FMRC, Financial Management Resource Centre. The leader was then Dr. Jeff Meredith, later Professor Meredith, and Andrew Geddes was one of his key support staff, and he had about 5 or 6 others. They laid the foundations. Now, there are accountants around Australia who did adopt what FMRC were talking about, and they've gone on very successfully. But unfortunately, here we are, 43 years later, and Intuit QuickBooks do a survey and find that only 15% of the profession are achieving anywhere near what the aim was 43 years ago with the support of the Institute and the CPOs. And that disappoints me.
We got a long way to go. It's like yesterday I was watching one of those Xero ads, and, they were talking, the last 10 or 15 years we've had, the Xero data import and the small business, and, the ad saying, you use it to run your business better and all that. It's a tool, but I was thinking, if people are running their business better using Xero, why aren't the business profitability gone up over the last 10 years? And it hasn't. It might be, government regulation. There might be a few other things, tailwinds in there. But I'm just thinking, and part of the thing, of course, is the small business owner. They've only got limited skills. I might be the best plumber or electrician in the world, but where do I pick up my small business training and skills? From my father or my mates or the internet. Or if I've got a very good accountant, they will be my mentor and take me through the process and guide me and move me along. But if I haven't got that, for the other 90%, willy-nilly, isn't it?
So this probably leads us through to what's the real opportunity for accountants in advisory services?
My thing is that if you've got a practice, you might have a practice, predominantly compliance fees, $1 million. You do advisory well, and it's going to take a bit of work. It's like that thing of we got to invest time. Like if you want to get good at anything, it's going to take 10,000 hours, Peter. It's not going to be a 5-minute thing, but we can get started. You do advisory well, over time you could double your fees, triple your fees.
Yeah.
Quite
very
easily.
happy.
We've had with the TaxFitness business benchmarking program, we had one accountant a couple of years ago had a client, $4,000 compliance client. They kept saying each year, I don't want any more services. We showed them the benchmarking over we did it quarterly over the 2-year period. Their profit went from about 300 grand to 2 mil. So it's extreme example. The accountant was getting $4,000 a month, 48 grand a month.
4 grand to 48 grand. Yep.
Yeah, 48 grand. Accountant's super happy. Client is, their whole life's changed, of course.
Yeah.
And that's just one example. I'm not saying we can do that with every client, but most businesses, we can improve their performance.
So why do you utilise the top 20% to do the benchmarking comparison?
I beg your pardon, sorry, Peter?
Why do you utilise the top 20% of a business category as the benchmark comparison?
I'm not sure how it's like all these ideas that I'm not sure where they come from. Maybe the top 20%, I was thinking of the top 10%, but then I thought that is too small a group, and it may be too limiting. The top 20%, I think, sort of ties in with the Pareto principle, the 80-20 rule. 20% is still quite a wide range. So a lot of us can see ourselves being in the top 20%. So we definitely don't want to be at the 50% level, and we definitely don't want to be at the 43% level because we're probably underwater losing money. So the 20% is pretty achievable if we want to do it for most people.
Okay. So what's the key outcomes that you've seen out of the benchmarking work that firms that are using the TaxFitness program are finding?
Well, there's two things. There's two benefits. The first thing is with the software. But what we recommend is for every business client. I saw someone this morning. You got 200 business clients. We get the support staff to do a 5-minute business benchmark report, and we just show them the gap. So we benchmark your business, Peter, and we might show that your cost of goods sold is 30% instead of 25%. It's costing you 60 grand a year. Okay, so we show the client that. Takes 5 minutes every year. So 30th of June, 25, 26, blah, blah, blah. The client will see the opportunity. Then we say, what do you want to do about it? You're interested in realizing that that lost profit opportunity? And the client will say, I don't care. I'm happy just doing what I am, and that's fine. Some clients will say, yeah, tell me about it. And then we talk to them about our advisory program, explain the cost, and then we sign them up ideally over a 12-month advisory program, and we work with them with the software, doing the benchmarks quarterly. And we over that 12-month, we realise that, say, $60,000 in the example, and then the accounting practice would probably get $10,000. Okay, so the client is benefiting because their profitability, we're actually, instead of this advisory that doesn't change profits, we can have a lot of advisory services that, it's sort of like compliance related. We tick a box, we've done this or we've done that, but nothing actually has dropped into the bottom line. This is actually putting money on the table. And of course, that flows into our other conversation down the track is, what's the business worth? If I increase my profits, 60 grand, my business is worth another 250 grand.
Yep.
And that's another day and another story.
Yes, so it's a great use. There are other people producing benchmarking reports in Australia, and
there are.
And as well, we've used one of them, and as far as I know, they still are calculating on averages, but there are accountants presumably using that material. Do you come across that much when you're talking to accountants? Are they saying, "Oh, we've already got this," or is this an indicator that's not really giving their clients what they're after? That 20%, I think, is a great magnet to be saying to the clients. It's you're talking about sport. I follow the English Premier League, and no one wants to be in that bottom even bottom 80%, because over there the three bottom teams get relegated, and that costs that costs the club millions every year when they get relegated because there's no TV rights or nowhere near the TV rights.
The coach is gone, and half management's gone. It's a complete disaster. Yeah, no, 100%. They're a good product. There might be one or two others, and as you said, they. My understanding is, they're doing it on the averages and also the data they get. Our key difference, of course, is, and our focus is, we just want to concentrate on what the top firms are doing.
Yeah,
that 20%. That's I think it makes a lot of sense. Definitely.
Yeah, and so in football teams, you worry what Manchester City, Liverpool, Manchester United, and Arsenal are doing. Anything can get, and probably a couple of the others. And if you're down the bottom, and it's the same in business.
Definitely. Like business, no one invents any new ideas. It's like writing and books. And Stephen King, he says he reads 3 or 4 other people's books a week. And he's not stealing their ideas. It just goes into the factory, and you take the best bits, and then he puts it into his next bestseller. Same with business. We got to take all this stuff in that the best people are doing and implement it in our way. Okay,
so as part of this deal we have, it's a promotion with TaxFitness, but ESS BIZTOOLS obviously is also involved. And what you're offering is a $200 reduction on the TaxFitness subscription. So instead of $1,200 plus GST, it's $1,000 plus GST. And to make this a great promotion, ESS BIZTOOLS has also joined in. And in that package, for people that pay the $1,000, we're offering free access to our starter package for 12 months. I think that's a reasonable offer for people to get underway. Now, some of them might say, "Oh, it's only the starter package." Well, the starter package is very important. The CEO or the MYOB Managing Director, I think his title was, wrote a report for the Financial Review that got published nearly 2 years ago. In fact, it was published in March 2024, where MYOB had analysed new people, 1,000 firms that they had new to them, what had gone on in their first 6 months. And some of the things that he discovered, we've been talking about for years in our starter package. Make sure that you've encouraged your clients to talk to their suppliers before they start their business, because apparently, according to MYOB, a significant number of that 1,000 that started had assumed that their suppliers would give them 30 days credit. And that's what they did their cash flow forecasts, if they did them. And when they turned up to place the order, they got a hell of a surprise, because the supplier wanted cash up front, and probably wants cash up front for 3, 4, 6 months or so until the new clients prove their bona fide. One of the other big issues that MYOB identified, which is again one of my strong points in emphasising in the startup business, is don't assume that you've got to give credit to everyone. Apparently, they'd assumed that they had to give credit to anyone that asked for it. So they ended up with a lot of people who were, unfortunately, were other businesses' problems. But if you are going to give credit, you need to have a debtors management system, because they assumed that everyone would pay them in 30 days. And you and I know that's really not what happens. I've come across SMEs with debtors days outstanding over 100 days, and their cash flow has got to be suffering. So that's one of the key packages that we've got that comes with our starter package, is giving you the resources to counsel your new clients when they're thinking about starting a business. But one of the big things in starting a business is to go through all this before people have actually submitted their resignation from their current employment. You got any comments on the problems people encounter when they just go off and decide to resign tomorrow and start a business on Monday?
Well, it all comes back to there's that many problems. I do a lot of hiking, so it amazes me. People start a business or start off. It's like going hiking. You don't know where you're going. What's the direction? You know, it was like, I'm going on holidays, but I don't know where I'm going. You know, you don't just turn up at the airport and just get a random plane. And it's the same with business. You need to decide your capabilities and get organised. Decide where you're going to go, and then plot your course and monitor it and manage it.
Yeah, you want to know where you're going to sleep every night, don't you?
Exactly. It's sort of pretty important,
It's the same in a business.
As you said with the business, people just buy it, and then I'm in there and, what the hell,
Well, that's the next category I was going to talk in, just this brief overview of the beginning of the starter package. We got a complete overview of buying a business. And again, it's very important. Don't go signing contracts. You've got to insist that. But I think what I'm trying to achieve out of all this, Darren, is to encourage accountants to be seen to be willing contributors to improving the knowledge base. We have short videos which we supply to our clients, our subscribers, and say, now you can produce exactly the same as this. Don't put it on with my face on it. Your prospects want to see you talking to them, but there's the wording. We give them the wording because the word will get around. There are not that many accountants doing all this, unfortunately. So that if you're seen to be very proactive in helping people before they actually sign a contract, to make sure that they've looked at all the alternatives. And one of the other things we feature is research and development. Now, I find a lot of accountants, unfortunately, are shy about research and development. And a few months ago, I come across a statistic that I've been asking the tax office for years, or searching on the internet. I wanted to know how many SME type businesses, and you have to be a company to claim the research and development tax offset, how many were small businesses? And the tax office has produced, I think, the first time ever. So we got the figures for 2022-23. Over 7,000 small businesses participated in research and development. In fact, that represents 46% of the total. So I think that's a good indicator that there are people out there doing research and development. But I fear for the type of accountancy firms that we're talking to, handling the SME market, that a lot of those 7,000 businesses were probably driven towards Big Four or top 100 firms. And I'm not making any criticism of them. One of my brothers was a partner in one of those Big Four firms, and we've got a number of subscribers in the top 100 list, and they do a great job. But I must admit, most of them come to ESS, I think, to get our research and development product package. So what we have done, we've introduced for our starter package an introduction to research and development. So that, Darren, if you came into my office today and I'm going through my checklist and you're a tradie, and I would say, do you do any experimentation? Do you do it? Oh, yeah, we have a look at things. Well, what do you do with it? Oh, we talked to our previous accountant and he couldn't help us. He said it's too complicated. Well, I got news for accountants. It's not that complicated. We've gone through and written a detailed system. We've got flow charts there to help you explain it to your clients so that you can at least give them the introduction. You can tell them they've got to be an incorporated company to claim the offset. So do they want to go convert from the sole trade or a partnership they currently are into a company? They've got to spend at least $20,000 on legitimate research and development expenditure in the financial year. Now, I've had someone recently, when we went through it, he says, when I told him that, he said, it's only going to cost me $3,000 to do this. And I said, well, you're not going to get the benefit, so you don't have to even go through. We won't do a research and development plan. But many of them will spend substantially more than $20,000, some up into the millions. I had a client a few years ago that was spending an average of $2 to $3 million a year, which was definitely an SME company. Now, it's grown a bit since then because their experiments work, but the owners of that company were putting a lot of money in, and it's now paid off for them. So research and development, we can help. Debtors I've talked about because it can be a fatal area for SMEs. Just going back to the MYOB story, what the managing director indicated in his article was that the crunch for these new businesses occurred after about 6 months of operations because they'd had to pay their suppliers up front. They hadn't budgeted for that. They suddenly found they had some people who were not that keen on paying their bills, and their debtors' days outstanding was a lot more than 30 days. So that was hindering their cash flow. And so by the time they get round to about 6 months, they forgot to pay someone else called the tax office. And the tax office started getting onto them. And obviously they're looking for any GST that they owe, tax deducted from employees' wages, and superannuation. And that was the real problem that the article written by the MYOB's managing director was getting at. The other big area, I think, is charge-out rates. And yesterday, you and I sat through a very interesting presentation by Andrew, who was looking at, and charge-out rates were definitely mentioned. We have a product which we call the Tradies Charge-Out Rate Calculator, which is a great approach. It doesn't take that long, half an hour, to prepare charge-out rates for 20 team members based on what are they? Are they leading hands, foremen, skilled tradesmen, labourers, should all have independent charge-out rates. And we have a subscriber who, when he came to us, had 10 tradies as clients, he told me. He now tells me he's got over 100 tradie clients. And as part of the deal, he put to them that he needed to monitor what they were doing during the year. So instead of getting paid about $1,000 for the tax return type work, it's now $10,000 to $12,000 for 100 clients. So he's created a very good, solid core of clients. And he's become a bit of an expert in tradies type matters. He even goes to the plumbers conference and gives a presentation, and that gets him more clients. So that's the ongoing circumstance, which I know you're a keen supporter of in any case in the benchmarking side. So you got any comments or questions on what I've just related, Darren?
No, I agree 100%. The tools are there, the systems are there, the training and support's available. People just got to do it. You know, people just got to get started. You know, it's like Plato said, the start is the most important part, because once you kick it off, then you grow, you learn, you get better, and you see the results, and you get bigger and better, and it goes from there. You just got to get started.
Yeah, and at ESS BIZTOOLS, we're very much aware that people at times forget they've got subscriptions to products like ours. So we're going to remind them. So we're putting out a new process in the next week. And that is, we're going to ask people when they come to us, and all our current subscribers, what are the packages that we've got within ESS BIZTOOLS? And if you don't mind, we're going to add a couple of yours into this as well, and say, and benchmarking and valuations and that type of thing. What do you hope to do with your clients? And we're going to give them an indicative fee summary of all the processes we've got. I want people to concentrate right at the beginning and telling themselves what's their return on investment going to be. And then we're going to be prompting them throughout the year and saying, well, how many new data systems have you done? You identified in your plan you were going to do 10 a year. Have you started on that process? That's nearly one a month. Because I think people forget it. I know when tax returns are getting done, everything's at pressure. But your clients have also got a lot of pressure in how they're actually running their business. So, Darren, that brings us really to the end, and we want to just mention what our special promotion is. So we have joined forces with TaxFitness, and as I said a little bit earlier, the subscription level for the TaxFitness 12-month subscription has been reduced by $200. So for $1,000, firms get access to your benchmarking package, and you've got a few other key packages. Do you just want to mention them now?
Yeah, well, in the subscription as well, we're talking about benchmarking at the moment. You know, one client, as I said, you put them on the annual quarterly benchmarking system, that's $10,000. You know, you put 10 clients on there your first year, you start slowly, that's $100,000. Okay. And then the other main module we've got, of course, is the tax planning. So once again, I just had a demo with quite a modern advanced practice, and they've an hour ago, they've got about 150 business clients, and they do tax planning for 80% of them.
Good.
Which is really good.
Good.
In contrast, about a month ago, I did a demo with a practice. They've got 300 business clients, and they did 4 last year. So you see some have got a long way to go, or a lot of opportunity. Others are starting to nail the tax planning and advisory type thing. So, okay,
so obviously a subscriber gets the full TaxFitness program, and that also includes some business valuation.
Yeah, it's got 400 business valuation data for 400 different industries. But TaxFitness is not just about the software. The software is one thing, but as we've talked about before, what's more important is having a system. So we've got, for the tax planning, we've got a 100-page manual. We've systemized everything into 10 different steps. This is how you sell it, Peter. This is the chapter how you talk to clients about it. This is how you do the report. This is how you do the implementation. We've done the same with business benchmarking. We got the price list. This is how we charge for it. It amazes me when I talk to a lot of accountants how they're underpricing all these advisory services.
Yeah.
It's absolutely nuts. You know.
Okay, so for our accounting viewers and bookkeeping viewers, of course, you're entitled to participate in this. So the TaxFitness subscription is $1,000. Now, to get that $200 discount, you need to insert the code ESS100, and you will also get 12 months access to the ESS BIZTOOLS starter package. Now, to access this benefit, this package, please go to www.essbiztools.com.au, click on affiliate packages, and then click on TaxFitness, and then click on subscribe to TaxFitness. And you then process, you'll be on the TaxFitness website then, and you will complete your subscription. TaxFitness will alert ESS BIZTOOLS that you're subscribed, and we will be contacting you for uploading the access to the starter package. So that's the process, and you at the end of the 12 months, of course, we hope you renew your subscriptions, but if you don't, there's no ongoing obligation to either TaxFitness or to ESS BIZTOOLS. But Darren, is there anything else you wish to comment about at this stage? Or perhaps we should talk about what we're doing on the ongoing. I forgot to mention that. We're going to be presenting this series of podcasts every fortnight between now and the end of June, where Darren and I are going to talk about these issues. Now, we've done today's with only Darren and I talking, but we're going to open up the invitation, if you like, to people to attend, or you could send us in some questions before. So the next podcast is going to be on Wednesday, the 25th of February at 3 p.m. AEST, and this will be shown on the ESS BIZTOOLS website. So 3 p.m. AEST on the 25th of February. Obviously, there's no charge to attend the podcast, but if you wish to be in the audience, and you can just type in questions if you want to do it that way, or you could send one or two questions through to us beforehand. You can send the questions to peter@essbiztools.com.au. I will share them with Darren, and we'll be equipped to answer your questions on the 25th of February.
My final thought to wrap up the benchmarking today, Peter, is I think back to Roger Bannister. As we know, very famous Oxford Englishman, 1954, first man to break the 4-minute mile.
Yep.
Before he broke that, they basically said it was impossible.
Yep.
That it was just, man cannot go so fast. It's just human biology, blah, blah, blah. But of course, once he broke it, within about 18 months, 10 or 12 other people broke it because he suddenly showed them what, it was all mental. And that's the same with the top 20% benchmarking. I'm running a business and I think, I can't put my charge out rates up your calculator, or, this is the level of profitability I should be making. But then when you see the top 20%, what other people are doing in your industry, they've achieved that 4-minute mile, then you suddenly believe that maybe I could do that with a few tweaks.
Yeah.
Sorry. So.
Yeah, it's a good example. Dawn Fraser did the same thing, didn't she, with the 60-second 100 metres in the 80s?
A lot of it.
No one thought you could do it now. Now nearly every athlete seems to be able to do it.
And it's like the Winter Olympics you got on at the moment, all these twists and turns and speeds. It's not possible until somebody does it. And then everybody jumps on the bandwagon. And that's the same thing. Yeah.
Okay, Darren, well, thank you very much for joining us today for this first podcast. I did mention at the beginning that we have another affiliate involved in this process, and that is the Boss Factor Library, the managing director of which is Trevor Marchant. Next week, on Thursday, I haven't got the date. What's the date? The 19th, we have a podcast with Trevor Marchant, where we're going to be talking about the selling of accounting skills. Trevor is a very experienced sales manager trainer. He was the trainer for Westpac 30 years ago. I never knew banks had training managers, but they did. And for the last 20-odd years, Trevor has been a frequent participant with accounting firms. He's trained hundreds of accounting firms. I've been on a number of his training courses over the years. So he will be talking to us about the services that he offers through the Boss Factor Library. Darren, thank you very much for being with us today. And I look forward to joining you in the next podcast for TaxFitness on Wednesday, the 25th of February. And I hope the people who are watching today will be able to join us then also.
Thanks, Peter.
Okay.
Talk soon. See ya.
Thanks, Darren.
Bye.
And we look forward to seeing everyone at that time. Have a great day. Goodbye.